Hello everyone, welcome back to Stock Spy. Today we are diving into high stakes head to head between two explosive tech stocks, Supermicro, ticker symbol SMCI, and Palantir Technologies. I currently own both stocks in my portfolio, but if I were starting fresh and could only invest in one of them, which one would I pick? Let's find that out. Let's start with the basics. What do these companies actually do? Supermicro is a leader in high-performance, energy-efficient server solutions. Think of it as a backbone for AI infrastructure. They build the physical servers and data center hardware that power everything from ChatGPT to your favorite streaming service. As the AI boom continues, Supermicro Systems is riding a wave of unprecedented demand for AI-capable servers, racks, especially those optimized for NVIDIA GPUs. On the other hand, Palantir is a software-first company. They specialize in big data analytics and artificial intelligence, specifically helping governments and large enterprises make sense of massive data assets. Their platform, Foundry and Gotham, are essentially the intelligence layer sitting on top of the kind of hardware Supermicro builds. So in a way, they both play in the AI space, but are two very different layers of the tech stack. SMCI is infrastructure and Palantir is intelligence. Now let's look into the growth. Supermicro Systems revenue growth has been insane over the last 2 years. In fiscal year 2023, they reported over $7.1 billion in revenue, a massive jump from over $3.5 billion 2 years prior. That's a 100% revenue increase in a short span, fueled primarily by the AI infrastructure demand. And it's not slowing down. They are guiding even more growth this year as the data centers scale up, hyperscalers place bigger orders. Palantir's growth, meanwhile, has been more modest. They are posting around 20 to 25 annual growth. But what makes Palantir really stand out is their shift into profitability. For a long time, Palantir was burning cash, but in the last few quarters, they have posted consistent profits. It's a huge milestone for a company that was once the poster child of speculative tech. So in raw revenue growth, SMCI wins. But Palantir's shift towards sustainable profits and sticky software revenue is nothing to scoff at. Let's talk numbers. Valuation. Supermicro Computer caps currently hovers around $45 to $50 billion. Its forward P is around 25 to 30 depending on how optimistic you are about the earnings. That's relatively reasonable for a company growing revenue north of 50% year over year. But the catch, their business is hardware and margins are tight. A supply chain issue or a pricing pressure can compress earnings very quickly. Palantir, on the other hand, is valued at around 60 to 70 billion on a price to sale basis. It trades significantly higher than SMCI. But it's a SaaS business with higher margins and recurring revenue. The big question is, will they ever grow fast enough to justify this premium? So valuation wise, SMCI might look cheaper on the surface. But Palantir offers that software as a service multiple which could pay off in the long run if growth accelerates. Every investment comes with risks, and both these companies have their weak spots. For Supermicro computers, the biggest risk is commoditization. Hardware, no matter how advanced, can become a race to the bottom. Competitions from Dell, HP, and new entrants like Lenovo or even NVIDIA's direct partnership with hyperscaler could cut into their margins. Also, any delays in AI build-out or tech cycles can hit their top line real hard. Palantir's risks are completely different. They are heavily dependent on government contracts even now. Still, over 50% of their revenue comes from that segment. While they are expanding into commercial space, it's a tough nut to crack. The AI buzz has helped Palantir pump its stock. But if adoption slows or competition catches up, think Microsoft, Google Cloud or Snowflake, that could spell trouble. Now to the fun part. What are the upcoming catalysts? For SMCI, NVIDIA's growth is their growth. As long as Nvidia keeps pumping out GPUs and data center needs AI racks, Copper Computer will be there to assemble and ship. Their expansion into liquid cooling and energy efficient rack designs also give them an edge as enterprises go green. For Palantir, it's all about AI development at scale. They have launched AIP, Artificial Intelligence Platform, which is getting rave reviews from enterprises. As more companies integrate LLMs into their workforce, Palantir tool could become indispensable. Also, international expansion, especially in Europe and Middle East, could be the next leg of their growth. Alright, so here is where I stand on this. As mentioned, I own both SMCI and Palantir, and I believe both are playing different roles in the AI revolution. One builds the stage and other performs on it. But if I were only investing in only one of them today with a fresh capital, here's what I would do. If I'm looking for a short to medium term gain and riding the hardware AI wave, I'd go with SMCI. Their earnings are explosive, growth is visible, and demand is tangible. But if I'm playing the long game and want to own the software layer of AI infrastructure, I would heavily lean towards Palantir. It's higher risk, sure, but it has potential to become the snowflake of Salesforce of AI-driven enterprises. Ultimately, it comes down to your time horizon and risk tolerance. For pure momentum and exposure to AI spending, SMCI is hard to beat. For asymmetric upside and a software mode, Palantir might SMCI versus Palantir showdown. Let me know in comments which one would you invest in today and why. Or are you like me, holding both and letting the AI future unfold? Don't forget to like, subscribe and share if you find this helpful. I'll see you in my next video. Thanks a lot for watching.